Hello again, everybody. Dwayne here from DRFX Forex Swing Trading. Going to be talking about the recent trade that was made on the pound US dollar, which provided us with a gain of 138 pips as the pair continued its breakout from the consolidation setup on the daily chart. Now, as you can see from the summary of the trade that was made, we were trading a consolidation breakout on the daily chart, and this was the signal to trade this setup was provided on December 31st, 2015, the last day of the year 2015. So we're going to be trading short with a stop loss of 120 pips using an entry order with a target set of 143 pips. The maximum holding period for this trade was 5 days because the strategy that we were using was that of slow breakouts. And for slow breakouts, the maximum holding period is 5 days, as you will see, as you would see in the trading manual in a section that summarizes and provides the 5 trading strategies. So this was the overall summary of the trade that we took on this pair. Just to give you a description, we're trading out of a pennant consolidation breakout on the daily chart. The signal given that we were actually trading was a second signal, second slow candle. With slow breakouts, we generally trade the second candle because the first candle of these types of breakouts is usually a weak candle, and since we generally avoid weak candles, the only justification to trade them is if the market provides us with a second slow candle signal with an appropriate setup on the 4-hour chart. So this was provided for us, and this justified the trade. And because the market closed beyond the 120 pip stop loss that we would use, we had to use an entry order for this trade in anticipation that the market would pull back to provide us with an entry that met our 120 pip stop loss requirement. And of course, the target set from this entry order would have been at 143 pips. This was the overall setup of this pair, of this trade, where, as you can recall, we were actually breaking out of 3 consolidation setups. The largest one was at this area here, the second one being a pennant as well, and the third one, which was the one that we were actually trading, was formed at this area here. So what we were doing is trading this signal following the initial breakout and the U-turn to test the broken support boundary. The target was actually set at the 145.62 area, which was a breakout equivalent of the second consolidation setup. Now, as you will recall from previous trades as well as what you will see in the trading manual, all consolidations have their respective breakout equivalent targets. This is the area to which all consolidations would move towards before pulling back. So identification of this area and the measurement of this area is crucial in determining our trading targets when it comes to trading consolidation breakouts. So once you incorporate this element as part of your trading plan, you can more accurately identify your trading targets and exit ahead of pullbacks. So all 3 have their respective breakout equivalent targets. The breakout equivalent for this consolidation as well as this third consolidation were actually further down, but the breakout equivalent of this second consolidation was the closest target. So this is why our target was actually set at the breakout equivalent of this second consolidation. So at 45.62, we anticipated that the market would head towards this area before pulling back, and this was expected to be, or this was determined to be, the best short-term trading target, given that the market generally pulls back at these breakout equivalent targets. So that was the idea behind this trade and this slow breakout strategy. And taking a closer look, you can see that the market provided us with a strong signal following this fairly weak signal. The setup to take advantage of this on the 4-hour chart was that the market provided us with a pennant consolidation setup where we placed our stop loss. We placed our stop loss above the resistance of this pennant, which also coincided with the downtrend that had been formed on the 4-hour chart as the market broke out from that consolidation. So our stop loss was at a very strong area that was supported by the resistance as well as the uptrend, the downtrend line. So a very good stop loss to use for a trade that would have provided us with strong, well, a good area to protect our trade. And as you will see in a moment, this was the placement of our stop loss at the strongest area is very important when it comes to trading, because what it allows us to do is to protect our trade against pullbacks that can take place before the market actually starts to move towards our target. And of course, all of my trade setups take place using the FXCM charts, because they use a daily candle signal, the New York close of daily candle signal, which is crucial to the methodology that I use in this type of price action candlestick strategy. So the charts on the FXCM were used to provide the entry signals and the setups, and the Gbp platform that I use is actually the one that I use for my actual trades. And as you can see here, the market went down to our trading target, providing us with a gain of 138 pips. So a very good trade, basically in sync with the methodology of trading slow breakouts, and this provided us with this gain within a four day holding period. So with 1 day to go to that 5-day period, you're able to capture this trade. Now, one of the highlights of this trade is the fact that the target that we set based on the breakout equivalent target, we can basically see why it was important to accurately identify that target and to exit at that area. As you will see from the 1 hour chart, you can actually see that the market has started to pull back, and that in hitting the breakout equivalent target of 145.62, the market has now started to pull back with this sharp tweezer bottom. And of course, as you know from the trading manual, tweezer bottoms and tweezer tops are strong indicators that the market is about to start a sharp pullback. So this is confirmation that our target was accurately set, and that holding out for any more than this would have been risky. It is possible that the market will continue to move lower towards those other breakout equivalent targets, but for the time being, it's good to hold on to a short-term profit and then wait for another trading opportunity to move towards those other targets. So in summary, this was a trade that took advantage of a slow breakout from a consolidation setup, and using the rules that are in sync, using the rules that are associated with this type of breakout, we were able to take advantage of this sharp or fairly strong breakout. So the key elements of these types of trades is that we identify the consolidation setup, we identify our target based on the breakout equivalent concept, we determine whether the signal that is given is appropriate for the type of strategy that we're using, and then we enter on the 4-hour chart, so long as the setup on the 4-hour chart is strong enough and is in sync with the rules that justify trading these types of trades. So, and as long as your stop loss is placed at a very strong stop loss area, you can be confident that your trade will be able to withstand any pullbacks that take place along the way. So a good trade, a typical example of how we trade slow breakouts on the consolidations, and we're going to wait to see if the market provides us with another opportunity, either on this currency pair or on another currency pair. So until then, take care.